Welcome to the Vault, where Central Illinois' best kept stories are held.
Well, welcome to the Vault, Darin. We're glad to have you on here. This is Darin Gehrke with Somercor. Why don't you go ahead and tell us a little bit about your background and what you do?
Yeah, absolutely. So Somercor is a non-for-profit company that acts as a bank for the SBA, the Small Business Administration, and partners with bankers like these two guys to do real estate and equipment loans through the SBA. So my background, I'm kind of like an onion. I got many layers, but when I got into financing back in the early 2000s, worked for Somercor for about 12 years, and then went on to banking and was a commercial lender for 5 years. And now for the last 2 years, I'm back at Somercor, so processing these loans on both sides of the table as a banker and as a processor, loan officer for Somercor.
Nice. So what is an SBA loan? What are these types of loans that you're actually doing? A lot of people don't understand the differences.
Yeah, so the SBA has two loan programs. One is what is typically referred to as the 7A loan program, and that's a loan that a bank does. They just get help from the SBA, kind of like the SBA co-signing on the loan for them. The bank gets a guarantee, 75% guarantee on the loan. So that's when you say SBA loans, people that usually think of that loan program. The 504 loan program is different. It's a participation program where your borrower has two loans, one with the bank and one with us, and it's for fixed assets, so large real estate, equipment projects. So your franchise restaurant, your car wash, your hotel, your dentist office, your chiropractor's office, and then any manufacturing building, things of that nature. So any business that would be considered small by the SBA, which is rather large, would fit into this program, and so the purchase of their real estate and equipment would fit in this program. So small by the SBA standards are $6.5 million in profit after tax or $20 million in net worth. So most businesses fall under the Small Business Administration size standards.
Nice. So when you say equipment, what sorts of things have you financed in the past?
Yeah, so done a number of manufacturing pieces of equipment, so that a manufacturer has $500,000, they got to get a new piece of equipment in. It's nice to know that the benefit of our program is our loan is fixed for 25 years, which we can get into, but manufacturers like to know what the cost of their machine is going to be over a long period of time, so it doesn't affect the cost of their widget, as much as a full bank loan would in 5 years or 3 years or whatever that loan would reprice. So having fixed for 25 years makes it a good fit for a manufacturer because they know this is what's going to cost for us to manufacture off this machine. So those larger pieces of equipment machines, those fit nicely in a nice 10-year or 25 or 20-year program, depending on the useful life of the equipment. And then other deals where you're like a restaurant where you're doing the real estate portion, you would also want to roll in the equipment, which would be kitchen equipment, furnitures and fixtures. You could roll that into loan and do that for a longer period of time, 20 or 25 years, where you wouldn't be able to do that conventionally on items like that. Mm-hmm. So it makes a little bit more sense.
What are the other benefits of a 504 loan or just using the SBA in general?
Yeah, so the SBA 504 loan is win-win-win. So we're a not-for-profit company in the state of Illinois, so we process deals in the state of Illinois and then a few counties in Indiana and Wisconsin. So our guise is to generate more activity and economic development. So that's the win for us. That's the easy one. Right. The win for the bank is the bank does the loan in a 50% loan to value. So your first position loan, if it all goes bad, you only have to sell the building for half of what it's worth. You're out free and clear. You're happy. You've got a great loan to value. So that's why a bank would want to partner with the SBA. For the borrower, the two main benefits are it's typically a 50-40-10 split, a 50% bank loan, a 40% loan to the through the Somercor, mm-hmm. and then the borrower only has to come down with 10%. So 10% down is sometimes the key to getting the financing. Yep. Where what would you guys need conventionally to do a loan? You would need
15, 20, 25. Yeah.
Sometimes 25% on deals that might need some SBA help. So
Sure.
absolutely. And then the second benefit is our loan, our 40% portion is fixed for 25 years at below market rate. So today's rates are 6.55. That's a really good rate in today's market. So to be able to fix that for 25 years is a huge benefit, regardless of only having to have the 10% down. The SBA wants this program. They want borrowers and businesses to be able to keep their capital so that they can use that to invest in their business and grow. So that's why they offer the low down payment option.
So one thing that I often see as a big misconception of the SBA is it's for people who wouldn't qualify for a regular loan.
Right. The mantra that you might hear is that the SBA is the lender of last resort. That's the comment people say, but that's absolutely not true. So we do A credits from a banker in a bank's mind. A lot of those companies want to have that fixed for 25-year lower rate. So it's a smart banking or smart borrowing decision. And we can do projects, like I said, up to really good size. There is no limit to the project amount. So in fact, I recently did a $30 million project, and we just carved off a $5 million piece for the SBA. So our max is $5 million, unless there's some green initiatives, then we can go up to $5.5 million. But that $5 million portion, even on a larger project, if you know you have $5 million of your larger project that's fixed for 25 years, that can be very beneficial to large, good companies that wouldn't necessarily need to have the SBA as financing, are still using our program and using it. So that's a good myth that we should be shattering.
So a lot of people might be confused on that sort of a structure. Who would they be paying? Like, do you have several different loans throughout that? You're paying this person, that person. You know what I mean? So
So the end of a 504 loan, you are left with two loans. So initially the bank's going to do a loan for the full 90% in most cases, and then we come in on the back end and take out our 40% portion from the bank, and at that point your borrower is left with two loans. So we do service the loans, even though none of the funds come from Somercor. In fact, none of the funds come from taxpayers either. The SBA 504 program is a zero subsidy program, which means there's no taxpayer dollars involved. If there are any losses or problems with the loan program, then those are covered by the fees that are in the interest rate and the cost of doing the program. But the money comes from some large secondary market investor. They're buying $200 million in a portfolio each month, and then when that investment happens, all the loans across the country get paid out on the 504 side, and then your borrower is left with two loans at that time. So it's an automatic draw on the SBA side, so they shouldn't really ever have to deal with us or do anything as long as payments are pulling each month. And they still would use you, the bankers, as the point person on those, even though they would have two separate loans.
How does that relationship work? Obviously, we have both worked with you before, both at the bank level and then also as a representative of Somercor. When a borrower comes to Somercor to apply for a loan, are they talking to you mostly, or are they talking to us mostly? What does that relationship typically look like?
Yeah, it can be a gray, not a gray area, but it can be a range of things. So they are our customer too, so I would want to have some interface with them in the beginning to explain the program, explain everything. But some bankers like to control that relationship and be the go-between and the in-between. Some bankers are like, go ahead and take care of the borrower altogether. We have to have a bank on board, so we're going to be working very closely with a commercial lender to get the deal to happen and make the deal across the finish line. So it can be a range of things. Most of my borrowers know me not personally, but have met me personally, know me, and that way it makes it easier for them to call me if they have questions on the SBA side. But the relationship, the borrower's deposit relationship, the relationship going forward, future needs, that's all going to be with the commercial lender, not with me. But they will know who I am, so they can call me if they have problems or questions about the Somercor loan.
Probably one of the most important questions is how do they typically get started down the path of a 504 loan?
Yeah, it can be an initial phone call to a commercial lender, like these two good commercial lenders right here, or to myself, and we can say, yeah, that's eligible, that fits the program. Let's look at what that looks like on an estimate sheet, and then let's get together and talk with the lender and see where it goes from here.
Perfect.
Yeah, definitely.
Perfect.
Yeah, I got to say those estimate sheets that you provide are pretty
Yeah.
simple. They break down nicely so the customer can understand and see what we got going on here. And I know you've printed out, different variations of those for me before, showing what we can do for different ones. So
As a banker, it's always nice to go to your borrower and say, all right, this is what it looks like conventionally. This is what you got to
Right.
put down. This is what your interest rate would be. We have this other option of 504.
Right.
Here's what an estimate sheet looks like. How it breaks out, 50-40, what the fees are, what the interest rate are, and maybe give the borrower that option. Choose one or the other. So it only takes me 5 minutes to pump out an estimate sheet, so I'm happy to do those
Right.
at any time.
And you've been in the past for me, you have been able to take, okay, here are the three potential scenarios, and you're able to put together an estimate sheet for all three, so that
Right.
way we can put, whether it be the costs going up on a project, or whether there are all kinds of different variables, but it seems like it's pretty easy for you to bake those in.
If I'm a borrower, I want to be able to see what's my long-term
Right.
impact here. So in 3 years, how much interest am I paying if I do it conventionally?
Right.
How much interest am I paying if I use the 504? Those fees, we can calculate those fees and break them out to what that would mean in an interest rate over the first 3 years, first 2 years, first 4 years. So we can do some calculations for the borrower to say, this is what it looks like. If
Right.
you're planning on selling this in 2 years, probably don't use a fixed long-term program.
Right.
If you're planning on keeping this project for 10 years, 15 years, or this building, this is where the benefits start really hitting you in year 2, in year 3,
Right.
in year 4. So
Right,
yeah.
right. And for folks that don't track rates on a regular basis like the three of us do, in my whole commercial lending career, the SBA 504 rates, whether they be at Somercor or otherwise, have always been under market for where I've been at conventionally. Is that typically always the case?
Yeah, that's a great question. So when the dollars are obtained by these investors to
Right.
fund the program, the SBA obtains those funds and they start that negotiation with those investors with the 10-year Treasury. So wherever that amount is, if that's gone up, you can kind of say the 504 rate's going to go up if that has gone down. So if you're following the 10-year Treasury, you can kind of guess where the 504 rate's going to be.
Right.
But you're correct; it's always been below market. There was one time a year and a half ago in the fall when the rates skyrocketed rather fast and banks hadn't caught up to it.
Okay.
So that was the only time in the 40-year history of this program that I've seen where rates got to be about the same. But then once banks figured out, okay, rates are going up and they're not going right back down, banks bumped theirs up, and then that spread was there. So typically we're a point and a half, sometimes 2 points below what a normal market rate is. Rates today on the bank side, on the estimate sheets that I'm sending out, are floating between 7.25% and 8.25%.
Yeah.
So we're, that 6.5% is pretty good. If we can get that to drop down a little bit, it's going to look even better. But 6.5% versus an 8 or an 8.25%, that looks great. So yeah.
What are some other huge misconceptions about the SBA 504 program or the SBA in general? Because I know there are quite a few.
Sure. One of the other ones I hear all the time is, I don't have 6 months to wait for an approval.
Right.
That's not the case.
Yeah.
We can run along the same line as the bank's processing. We do all the work for the bank, and we're an approved SBA certified development company. So that means we have status with the SBA that gives us a faster turnaround, a quicker response on our request. And since we do them every day, we know how to do the paperwork. It's not a 6 month process. Usually, the longest part of the process is when you order an appraisal, it takes 3 to 4 weeks to get an appraisal back. So we can be doing everything while that's happening, so that we can all come together at the end with our approvals and get ready to close for a borrower.
Yeah, which is the same case on the conventional side. No?
Yeah.
So it isn't any different.
Our team is still going to do credit underwriting and put it in front of a loan committee just like a bank would.
Right.
But we can do it at the same time you guys are doing that if we're brought in early enough.
Right.
So it shouldn't stretch out or make it any longer than it normally is in a process. So that's another misconception, is that sometimes the other SBA loan program has given the SBA a bad name because it's been difficult to get an approval when you're sending it in. As a bank sending it into SBA out in California, sometimes there's a disconnect there, but since we're tied into the program and we're approved by the SBA, it makes it easier and quicker.
What do folks typically need before they can start the conversation with you in terms of what kind of financials, business plan, all of those things?
Yeah, we're typically collecting anything you guys are collecting, so it's a
Okay.
good reminder for your borrowers out there that personal financial statement, 3 years of tax returns, personal and business, projections, 2 years of projections,
Yep.
a resume, simple stuff that you would be collecting that we can put things together for.
Do they need a business plan?
Business plans are helpful, especially if it's a startup or a
Right.
brand new project.
Right.
Large brand new projects, the SBA likes to have feasibility studies, but we can get away with that with a good business plan.
Right.
If you're an existing business, don't need a business plan. We can see historically
Yeah.
that you've been able to
Right.
to cover things.
That
Yeah,
makes
good
sense.
question. It's not an unduly amount of things to collect up front. It's pretty much the same you would use with the bank. There is paperwork involved, but we put all of that together. Basically, just send it DocuSign and say review it and
Right.
click.
Right.
So it's not for the borrower. There's not a lot of additional paperwork. Our application is 2 pages.
Right.
Pretty easy. Answer some questions. Shouldn't take too much time from a paperwork standpoint.
And one of my favorite things that you do is something that we're incorporating at some point here soon as a bank, which is a shared document storage location. So
Yeah.
I know that, giving, you correct me if I'm wrong, but you give the borrower and the bank access to the same share file.
Yeah, it's a
That-
link. You just click on it and drop your files
Right.
in. It's super easy,
Yeah.
super simple.
Yeah, it's nice. And it
Safe,
keeps everybody,
encrypted.
yep, safe, encrypted. It keeps everybody on the same page too. So while you're working through all of those items, waiting for the evaluation or appraisal to
Right.
come back,
Right.
we can stay on the same page.
Yeah, we want to do deals in the state of Illinois, and we want to get things done. So we'll be on top of you and the borrower with this is what's still needed. These are the items, and kind of work with you hand in hand as we go through the process.
Awesome.
I can't remember if you mentioned this or not. Does Somercor do construction projects?
We do construction. It's still the same process where the bank does the full 90% up front. So the bank would we'd get an approval up front saying that we'll come in on the back end and take it out. But you're going to be handling the draws with the title company, working with them as you would your normal construction note. And then on the back end, we'll come in and take out
So once
our
construction's
portion.
completed,
Yeah.
we finalize our loan, that's when you guys are going to come in and do that.
Right. All draws are in, everything's done, appraisal completion reports in, everything is ready to go. Then we send our closer from our team in, and they collect everything and put it together and say, all right, SBA, we want our money. And then it gets pooled into the next pool when that negotiation happens with those investors and you get paid out. So sometimes we wouldn't close for a year and a half later, if it's a large construction project. So that's typical. We get it approved up front, make sure it's ready to go for you, give you a 16-page document that explains exactly what it's going to look like on the end, and that way the bank's comfortable, the borrower's comfortable. They know that the SBA is going to come in on the backside.
So are there interest rate locked in then from a certain point?
It isn't. So there's one of the unique parts of the program is that the interest rate isn't determined until that funding happens. Lately, I've been telling people, you got a construction project or some renovations involved, this might be a good time. They're telling us that rates may go down in the fall when yours is going to be ready to fund. So, we're guessing there. So we don't know what the rates will be. But as Nick said, rates have always been below market in that trend. So you still should be good. A bank's not going to fix your permanent loan right up front. They're going to give you a construction note and a construction interest rate, but probably set your permanent note on an index of some sort. So it would be the same for us. But the rate doesn't get determined until that funding happens.
Be interesting in our world to try to tell people, we'll just tell you what the rate is like a month from now and just see how that goes.
Yeah.
Well, and
A month from now, let's try 12 months or 18 months
to
from now.
Darin's point, typically our construction loans are going to be on a variable interest rate during construction
Floating.
anyways. Yep.
Yeah.
So you never know what your rate's going to be until that construction period's done anyway. So that makes perfect sense.
Yep. I like it for the construction process because it can give a lot of times. Banks might have a little anxiety about, it's not done, it's not built, it's not whatever.
Right.
So it's nice to have, knowing that at the end of this, I'm going to have some backing from the SBA.
Yeah.
So
That's a good point.
yeah, it can give some comfort level to a bank to move forward.
Any advantages for minorities, veterans, anything like that? I know a lot of people automatically say, I'm a minority, I'm a veteran. What programs do you have?
Right. For the 504 program, there's no dollars involved there, but it does qualify you. So we've got to meet a public policy goal. We've got to look at jobs, see if some jobs are there, but we also, it needs to fit under what's called a public policy goal, so rural initiative, minority owned, things of that nature. So that would automatically qualify for the SBA 504 loan program. But in our area, central, southern Illinois, most loans can fit, just kind of designating that as a rural or as an economic initiative. But it does make them automatically qualify.
Right. So what about excluded industries? Are there industries that you cannot finance?
Great question. So it's for a for-profit. We want owner-occupied real estate and equipment. So investment real estate, apartment complexes, student housing would not fit. However, there are some businesses that you would think are investments, like storage units and hotels. Those do fit as owner-occupied in the SBA world. And then anything that's federally illegal would not count. So our cannabis storefronts, sale of hemp, things like that wouldn't fit because they're still federally illegal. So we would not be able to get that across. We can do gaming machines, things like that, if it's not the sole source of the revenue for the business.
Interesting.
Yeah. But other than that, most any other business that's for profit and owner occupied would fit.
And legal.
Would fit. And legal.
And legal.
Would fit. Yeah.
Throw that in there.
One of the other legal ones, if you have let's say your business is a workout place that's only for women, then the SBA would be like, nah, that's discriminatory. You don't.
Oh,
But if in their statement it says that they're also for men, but no men go, then we can maybe get that.
Got it.
But they want to make
Interesting.
sure it's all inclusive. And
Yeah, that makes sense.
Did not know that.
Yeah.
it's a 600-700 page rule book that no banker wants to know. So that's why you call Darin. I'll just
Heck
tell you what it
That
is.
You're exactly right. You're exactly right.
Yeah.
What's one thing that you wish more people knew about either the 504 program or the SBA in general?
Yeah, so I mean, from a borrower standpoint, they do have that mindset of, I don't want SBA. I'm not an SBA client.
Right.
I want them to understand that if you really look at the interest rate and getting fixed for 25 years on 40% of your loan, like in the markets when that was 4 and 5%,
Right.
is absolutely the best loan program for you. Where a bank, could do the full loan themselves,
Right.
still might be the best option for a borrower to do a 504 loan.
Sure.
So it's thinking of it as that lender of last resort is not. I mean, I really wish we can get that mindset changed from a borrower standpoint. From a bank standpoint, if you're a banker and you're a commercial lender, you may need a little extra enhancement to get it through your loan committee, and instead of thinking, oh man, this is going to be too much work, just give me a call, I'll do all the work for you, and then you can start saying yes to some of your clients instead of saying
Right.
no,
Right.
because it's a way to get the loan done on the bank side too. You walk into your loan committee with 50% loan to value, they're going to be like, yes, approved,
Yeah, it definitely helps.
Yeah, and we don't want to take bad loans to our loan committee either. You know what I
Right.
mean? A banker never wants to do that.
Right.
And so it's nice to have something that shores up the loan, even
sure.
if it is a good loan.
Right.
Absolutely.
I mean, no loan is guaranteed, but having that extra little bit with it, you know what I mean? As far as I shouldn't say no loans are guaranteed, right? If you do a loan guarantee, part of it's going to be guaranteed. So it's nice to have that on there
Absolutely.
as the extra safety net.
As a banker, when somebody would come in and say, all right, I need $500,000, but I only have $50,000 to put down. Your initial thought is, I'm sorry, come back when you've got $100,000 to put down, or $75,000 to put down. That's your initial thought, instead of thinking, all right, well, maybe we can squeeze that into the SBA
Right.
504 program, and then we can actually help this guy who or girl who needs it. So yeah, so thinking of, all right, I don't have to say no right away. There are options to get it to fit inside the box.
So with a 504 loan, say somebody's purchasing a business that has a lot of blue sky involved in it also, how can that help in a situation like that?
Yeah, we can, the 504 loan can be used in connection with other loan programs or other loans. So what we would do in a situation like that is we would take the appraised value of the building or equipment, and then we would carve that out of the total project and call that the 504 project, and do a 50-40-10 split on that amount of money. And then the other blue sky or working capital or inventory or things that we can't put on the 504 loan, you could do that with the other SBA program, the 7A, or a conventional bank loan, or a line of credit, or even using Illinois Advantage or some other loan program
Seller
out there for
financing.
that. Seller financing would work, anything else to try to maybe get that portion done. So there's still an opportunity to use 504 on the real estate.
Right. I don't think a lot of people realize that you can use those loans in conjunction with each other.
Yeah, it's nice. We do a lot of 7A, 504 combos. That does happen a lot. And then the other Illinois Advantage is the new thing, so that people are kind of using that to combo with 504 too. So.
Yeah. Does a bank have to have some sort of special contract to be able to use Somercor?
Not at all. Nope. Don't even
great
have to be signed up as an approved SBA lender. Yeah, not at all.
So if I'm a loan officer and I see this video and I have somebody I think could fit in the box, I can just call Darin and
Just give me a call. We'll work it through. On the bank's loan, on your 50% loan, you don't really have any requirements. You can set that rate, set that adjustment period as however you want to do it. So it usually can fit easily with any banker's loan policy.
nice.
Yep. There's 2 rules there. One of them is funny. One of them is you can't charge more than 6.6 percentage points over prime. So as long as a banker you're not charging 14% to somebody or 15%, I think you're okay.
So
Yeah.
you're saying like the really cheap payday loan places are in the.
They're probably not using
They can
us.
play.
Yeah, the cheaper ones can use us, but
Jeez,
not those
Yeah.
expensive ones. No.
It's like credit card rates, man.
Yeah.
Yeah.
Well, how can people get a hold of you, Darin? It's the easiest way.
Yeah, I mean, obviously, I'm on LinkedIn. Somercor.com website has my phone number and email address right there. Gherke@somercor.com. So you easily find my cell phone even right on my LinkedIn stuff. So feel free to click here, click there, and get me, or call these 2 guys at the bank and say, let's talk about this SBA stuff. Let's get Darin involved and start your conversation with them if you're more comfortable.
Love it. I don't know anybody that'd be more comfortable talking to us, but that's okay. But yeah, man. You got anything else you want to tell the folks before we let you go? This has been awesome.
No, I think that's good. Remember, I don't have anything else.
Okay.
No.
Awesome.
I was
Darin
going to say, remember the SBA is here to help you. But then I was like, no, that sounds like that's dumb. So cut that out.
Okay, I'll edit that.
Yeah, you won't. I know you won't.
No.
Notorious for saying I'll edit something out
And then
and
not
forget
doing it.
later.
The good news is no one makes it this far. So.
All right, Darin. Thanks for coming on, man. I appreciate
Absolutely.
it.
Thanks,
Appreciate it from you guys.
Boom.
All right.
The Vault, where Central Illinois' best kept stories are held.